AIM-listed Fox Marble, which produces marble which goes into bespoke kitchens and bathrooms around the world, has recently produced full-year results, revenues rising above 1.2 million euros for the first time, demonstrating the investment the company has made in its new processing facility. It's begun to pay off. Chris Gilbert is Chief Executive. He joins us now with more. Chris, welcome.
Jeremy, good morning.
What state was the company in as you went into this new year? I mean, just sum up the earnings for us to give us a better picture of what's been going on.
Yes, what we achieved in 2017, if you include the cash receipts part of our business, is that we doubled the cash receipts from 2016 to 2017. So if you include advances in that, which we don't recognise as revenue until material is shipped, it's exactly double. It's 1.6 million euros, which is encouraging for us. And this is on the back of the efforts that we've made around the world with our marketing, sales and distribution platform. And it also reflects, as you so rightly said, our factory and processing plant coming on stream. And more importantly, we've trebled the sales of our material that we extract from the quarries from one year to the next. That's really the encouraging metric.
Production, of course, is from your facility or factory is 12 months a year, but there's been a shutdown, as there is, of course, every year, isn't there, in the quarrying?
It's our planned winter shutdown.
Yeah.
It's under snow and it's minus 20, and for about 8 to 10 weeks we don't operate.
And how have you come out of that? Because I think that was at the end of February, beginning of March, wasn't it?
We were a little late this year, thanks to the weather, but at the end of end of March, beginning of April, we were moving back into the quarry. And one of the things that we did as a result of our recent fundraising is that we've applied a lot more capital to our most significant quarry, the Malasheva quarry, where there's real pressure on demand. We as much of this stuff as we can get out of the ground, we can now sell.
And what is it you're producing from there? Remind us what the top end marble looks and sounds like in terms of the names that we should be watching.
Yes, that's the Selene. That's the silver grey marble, which is hugely in demand at the moment, particularly in some of the newer markets that we've opened up. And then the off-white. White is always in demand, and our Illyrico Bianco is extremely desirable and very popular at the moment.
We've spoken to you before about sales here in the UK, some of the market developments. I know that you're in India, you're in the Gulf states, and you're in the US as well, aren't you? I said at the top you're around the world. That's not strictly speaking true, because you're not yet in China, are you? But when we spoke in January, China was one of your targets for this year.
It is. We're obviously sort of managerially constrained resource-wise. We have to pick our spots, and the spots we picked were, in that order, as you say, India, which is becoming extremely dynamic for us. It's a big market for us, and it's growing all the time. And as you say, we're now moving into the GCC countries. The US is a country where we think we're going to do very well this year, and now we can divert our attention to China and have a go at that market.
You say, of course, you're constrained in personnel. Obviously, you're not a massive company. You're not able to go out and hire willy-nilly. But what about the priorities now for your marketing and your sales force? Because clearly China is a big place, as indeed, of course, is India and the US.
Yes, the US is particularly relevant to us now that our factory is up and running, because the US is not a market that takes block marble. They don't process marble in America. They buy slabs. North America is the single largest market for slabs around the world. 15% of all slabs produced around the world wind up in North America. So now that our factory is up and running, of course, we're much more able to supply that market with our own material. So we now have a sort of soup to nuts operation, from the block through to the slabs, through to cut to size tiles, all of which we're now obviously very keen to sell into America.
What is your plan for China? China is in some respects difficult to get into. Sometimes you have to have partners, you have to have doors that are opened for you by other people. How difficult is it going to be to overcome those initial issues?
We have struggled in China. I think it was well documented that we announced an arrangement that we made with one very large marble company or stone company in China that sadly didn't seem to go anywhere. It sort of petered out, and we never really got an answer as to why that was. And when you don't know what the answers are, it can be difficult to negotiate your way through. But we are now in negotiation with a number of other large customers in China that we know quite well. They've been to visit the quarries, we've been to visit them in Beijing, and we expect to be able to talk about that throughout the course of this year.
Again, I said at the top that you have passed 1.2 million euros of revenue for the first time in these full year results that you had. Where does the company go from here? I'm thinking in the context of repaying shareholders' diligent following and so forth that they have in the company. And I know a lot of shareholders have been around for a long while. They want to see profits, they want to see progress, they want to see some move up in terms of some of the rewards. What is it you need to do to turn a profit? I mean, clearly there are costs involved, clearly there's quantities of marble involved, and also about the overall order numbers. What is it you have to do as a senior member of senior management to turn the wheels to make sure that profit starts to come through?
If you look at our progress as a company, which is an intricate mix of production, ability to extract from the quarries, process through our factory where we get higher margins, which is important to us in what is already a very high margin business, even at the block level, and into the marketing, sales and distribution platforms that we've built. Now, if you look at it, you can see that we've posted probably identical EBITDA losses between 2016 and 2017 of just under 3 billion euros. So we're at gross revenue or gross cash receipts of 1.6 million euros, which is 50% of that already. We've doubled our production from one year to the next. You can see that if we doubled our production from 17 to 18 and our revenue did the same, sort of followed the same pattern, and it will, then you can see that that gets us to break even without really having to do anything different than which we're doing, just applying what we're doing to a greater extent. We will increase our turnover, we will increase our sales, and we will become not just a cash flow positive company, but a profitable company as well.
Yeah, and one of the other things I want to follow up on is the subject we covered in January was the placing you had, the money that came onto the balance sheet. I know you had cash coming out of that. You at that point were talking about paying down all your debt. One of the reasons I know that appears in the profit and loss, you've got this loss coming through, is because of interest payments. Just to confirm, they're gone, they're finished.
They are. We repaid over £2 million worth of debt. One was a convertible that we'd had since IPO, which one of our shareholders had contributed to the balance sheet. And in cleaning up the balance sheet and retiring all of our debt, the interest component in our loss, which created this slightly larger loss than we had in 2016, has gone. So we have a much stronger balance sheet, and we're in very good shape to go forward.
Yeah, one of the other things, of course, as a global company that operates in different jurisdictions, is you have a currency exposure. How much of a drag has that been on these numbers that you've recently produced?
We suffer and we benefit from the FX movements. You know, I think overall, broadly speaking, it's a wash. Last year we suffered a little bit from our FX exposure. We have a natural hedge in that we receive revenues in dollars, euros and sterling. So we've got something of a natural hedge. We don't hedge much because, you know, this is not our game. We're not FX experts. Yeah. So we expect to be somewhat protected as a natural consequence of the different currencies we're paid in.
Okay, well, keep us up to date, Chris, and thanks indeed for dropping by with an update on Fox Marble. That's the Chief Executive of Fox Marble, Chris Gilbert. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.